Good morning and welcome to Trading with Larry. I hope everybody had a good weekend. Back at it, 8:30 Monday morning. Long night for me last night, actually. I thought there was really good trading action. Traded a little bit out of Asia and Europe and into the US. And we're seeing, I'm going to call this a little anomaly that the S&P futures are down on a Monday morning. I don't think we've seen that in at least 2 months, maybe more. So here we sit. Vol, a couple of things I wanted to talk about. We didn't really talk a lot before we got on the air, but I'm looking at Vol. Cash Vol is about 21, which is around the highest it's been, other than that little freak out that no one really saw, that pre-open on the last expiration Friday morning when it got to 29. But I'm noticing a little bit of inversion between November and December VIX. Okay. Usually the back month VIX is higher than the front month VIX in normalization. But when you're set to have a down move, they buy the front VIX contracts because they move way faster and way more. And kind of makes a little bit of sense because if in fact we're going to have a correction now, which it kind of looks like maybe the case, or a continued bitty correction that we're having now, um, this
This,
vol.
by the way, here. This, by the way, here is the VIX curve that you're talking about. Go ahead.
Yeah, so it's leaning towards that, and it's an interesting night. Like last night, the futures opened down, then they exploded up, and then out of Europe, they were significantly higher. The DAX was higher, and all those markets reversed. Nothing crazy, but certainly a bit. And we're at a point of time now where we're running out of time. The clock is ticking on the year, right? Wouldn't you agree? So what's today? The 17th. We're midway through November, of which you have Thanksgiving week coming up, not next week, but the week after, I believe. Oh, is it? I think it's next week, right? When is Thanksgiving? Next week? I think it's the end of next week.
Yeah,
So
yeah.
so the bottom line is, you really have this week and then Thanksgiving, which is kind of a throwaway week, even though sometimes in the past, people who were on this podcast who traded with me in the 90s know that there have been crazy Wednesday, pre-Thanksgiving and Friday half a day Thanksgiving type trading days. So you may get a little, but overall, pretty much quiet. And then you're really into the last 15 days of trading for the year, right? I mean, I know that, we're going to wrap up our stuff, with probably a week or two to go in the year. And maybe you're going to go to wherever, South America on your vacation or wherever you're going. I think that, I'm not calling it seasonality, but, you have the Santa rally, this rally, that rally. So, I believe this month will be tough, to get through, and we're gonna, all indices are pretty much negative. I haven't checked the Dow because that's been setting records. That may be flattish, but Nasdaq's down, S&P is down. It's the first month we're down, and unless something changes a lot in the next week and a half, probably going to have a down month. Obviously, it's too early to guarantee or know that for sure, but here we sit. um, I think a lot to talk about. The trade kind of, believe it or not, I believe the trade kind of, and it's weird, kind of makes sense. In the fact that they were, buying the market into the shutdown. They were buying every rumor that the government was going to reopen it, and when it reopened, we went straight down. So, I mean, actually, the market is making a little bit of sense. Um, and this opening is very interesting. The question is, do they hold? Can they hold? And what's gonna what's gonna happen sort of moving forward here? Um, you know that that's the question. I think that's the question of the day, right? I mean, can the market hold here? Um, I don't know if it will, but right now, we're sitting on the lows of the morning, other than the opening for a quick down move. And, looking across the board, bond yields still at 413 doesn't feel good to me. I mean, I don't know, I know you want to talk a little bit about the Fed because that's really been your mantra, that we've been talking about. So I'd love to hear, your thoughts. You said something about the Fed injecting whatever. I don't see any of that. I see the Fed trying to get out of here as fast as possible. But I'd love to hear your thesis on the markets, the Fed, and whatever you're thinking. You know, uh, I'd be very interested to hear.
Yeah, thank you. Good morning, everyone. So the drawdown in the market recently is very interesting because it's coming at the end of the year. Obviously, everyone's looking at seasonality. I'm looking at 2021 as a little bit of a proxy where you had bubble like conditions throughout the year. Then you have a little bit of a drawdown at the end of the year, towards the end of October, just like we had this year. And then at the end of it all, the market rallied and closed at an all time high before the bear market of 2022. So, that's one scenario that's feasible for this year. But to really understand what's going on, we got to go back to the last Fed meeting. And up here at the top panel, you have your 30-year yield, which I follow. And this white circle here, that's Fed Day. And that's when Powell came out and said, listen, the rate cut that you all think is 100% locked in for December is up for grabs. And rates reacted immediately, kept going up. And that really marked the interim high in the S&P 500. You could see the S&P 500 going down with a nice negative correlation to rates. You don't always see that, right? It's not always the case that rates up, market down, but in this case, this is what's happening. And you look at the Fed funds swap table, you look at this December 10th meeting that I'm highlighting here, only a 41% probability of a rate cut now. That was way higher a few weeks ago. Now it's below 50%. So they don't have enough data. The market is getting jittery about a rate cut. And usually, what pops a bubble is the market slamming into the brick wall that is the Fed, and the Fed not delivering what the market wants. So that's the other economic scenario at play. Then there's another one. You have liquidity drying out. You could see this tobogganing down of liquidity. What this is the the bank reserves held at the Fed by all these financial institutions that started to really come off at the onset of September. And by the way, if you're a trader and you know that as soon as September rolled around, it started getting a little weird out there. Things started not to make sense. This kind of explains to me a lot with liquidity drying out, things getting a little weird, and it's been drying out because they're unwinding the Fed balance sheet, which is, by the way, coming to an end. And as it comes to an end, bank reserves start to dry out, and the Fed knows this. That's why at the last Fed meeting, they basically said December 1st, we're injecting liquidity back into these bank reserves as quantitative tightening starts to end. So that's another economic scenario, which is actually bullish to look at. If liquidity starts to come back in, the market may want to rally at the end of the year. Now, you look at another angle here, you have this massive rotation that you've been seeing really recently, led by healthcare. Look at healthcare over the last week, up 3.9%. Meanwhile, consumer discretionary down 2 and 3 quarters. So this is why you're seeing the Nasdaq underperforming. This is why you're seeing the markets falling as well, is because they're so weighted towards tech, and tech has been selling off. And what's been getting bought is healthcare. You look at the XLV ETF; it's been flying. There's been a lot of mutual fund flow into there as they had their fiscal year end about a week and a half ago, and they've been buying healthcare. And there's a big AI story there too that a lot of that's been circulating around, but the rotation is on for healthcare, which has been beaten down. But this factor here, this is why you're seeing value start to come up. This is the white line, and you're seeing growth start to converge back into value, which is the blue line. These lines converge frequently, which is what you're seeing. So as soon as they converge, maybe that's an opportunity back for risk on. So there's a lot of stuff at play here. I think there's liquidity issues. I think there's rotation issues. I think there's interest rate issues with the Fed as well. So this is the stuff that I'm looking at. Where the market goes from here, it's looking a little dicey. I think the market's very scared about not getting a rate cut. So we'll have to
Really?
see.
Really?
The
I
Fed,
don't I mean if you're banking on a rate cut right now, you're going to be losing, okay? The Fed has basically come out in my mind and said they're not cutting, okay? Listen, they gave that last cut. I don't even know why it was a wasted bullet. Think about it. The 10-year was trading at 4%. They cut rates a quarter and the 10-year is now at 4.15. So, what does that mean to me? They wasted the cut. They're not going to waste another cut because they don't have a lot left in the gun. Okay. I mean, for rates to be below 3 means you're in a cataclysmic, problem. Okay. Which we may end up being in, but right now we're not in that. So for them to use another bullet here is a waste. It's a waste of a bullet. So if people are out there expecting the Fed to cut, unless the market has a significant sell off in the next, you know, little while before the meeting,
right?
um, there's no reason for them to cut. There's a lot of things that I want to get to. A lot of what I'm seeing, like I know you're looking at a lot of these other things, sort of like what the Fed is doing, injection of liquidity, this, that. I'm just looking, to me, the VIX being above 21 now, okay, is a problem. Okay. We have never been here. Okay. Never. Okay. And all we need to do is go down 1.5% today and it'll be 25, which, listen, for us, that's what we wait for. I mean, that's when we perform best, is when we have high volatility, a lot of movement. Today is a weird one. Like you said, to me, isn't it a bearish sign that they're buying healthcare and value and getting out of high tech? I mean, isn't that really defensive? In your mind, I, I mean, that's the way it's looking to me. I mean, if the Dow outperforms the Nasdaq again by hundreds of points, that's what it's telling me, and it's purely out there. And since I got into this office this morning, the S&P was up like $15. It's now down 13. Is it the most ever? No, but it's on the line of getting people really afraid. And I think people, you know, are not finding places to what I would call hide. And we have, the big savior is the one that may put the nail in the coffin, right? The big
Well,
savior.
they've been hiding in value. They've been rotating to value. That's where they're
I
trying to
understand,
hide.
but value is never going to move the way tech moves. So value is going to move slowly. Okay. And value is more like back in the day in the 80s and 90s when we traded, you know, Ma Bell, AT&T or telephone in the day, or, utility stocks. That's what this trade is kind of like. You know, So I would say,
The other issue, and I just saw a headline pop up. Amazon seeks to raise about 12 billion from U.S. bond offering, and that's been a trend with AI companies now using leverage to finance a lot of their deals and projects. And I think that's another issue the market is getting concerned about.
well, listen, it's taken these stealth bombers, right? Companies that were just producing massive revenues, and now they're outlaying massive amounts of money hope in the hope that AI takes off at all. And that is yet to be determined. And if you're believing OpenAI and Sam Altman on all of these $1.5 trillion promises, you may get your head handed to you. And I think that that's why Meta Meta went from an incredible advertising company to the metaverse, which, sort of screwed them for billions, right? And now they're going into this, hard data center stuff and all of this AI stuff. And I think they could run a risk of really getting hit here and not not performing. So again, stock's down off the high. It's still holding up, but overall, you know, it's a big risk. I think a lot of these companies are in big risk. Look at Oracle. Why don't you pull a chart on Oracle? It's actually an amazing chart because it retraced everything plus what it made off of this, bogus open AI deal. I don't know if you can put Oracle up, but I mean, the stock has
Yeah,
gotten just crushed. And a lot of that reason is because of them coming out and saying the Blackwell chip is too expensive for them to make money. So, again, I don't know exactly what I'm looking at with that. Um,
hold up, hold up. There's Oracle right there.
yeah, so
That's
it's right back to it's back. Is that the 50-day or a 200-day that it's right on?
100 day right there. The
Yeah.
yellow line,
Yeah,
100
so
day.
it's going to break that moving average probably, and it's going to go lower than when the whole thing was announced for sure. And I think you're going to see that in a lot of these companies because, I mean, you know, people out there might not agree, but I think Sam Altman is a snake oil salesman. Let's get done with 300 billion. Why do you need 1 point? The guy literally made deals with all of these companies within 2 weeks. Every day there was another deal, right? Deals with competitors of each other, just deals all over the place. So,
And
it's
this is
very
XLV, by the way. This is the
well,
healthcare ETF. Just this, what you're seeing here is the healthcare ETF, XLV.
wow, good move.
Big move. Big move.
What do you think
Big
that's
move.
what do you think that's because? I
So a
mean,
couple of things. I think that first of all, healthcare was beaten down to begin with. A couple of months back we were talking about it. Uh, you had like United Healthcare as part of this. That started to move, and that kind of fizzled out. Then Pfizer came out. Trump lifted tariffs on Pfizer, and they got a lot of pricing clarity. Pfizer started to move, and that gave a lot of attention to a forgotten sector. And then all of a sudden, I think what began to happen is a lot of mutual funds that had fiscal year end started to pile in into healthcare, not as much into tech. That kickstarted a rotation, and then everybody just piled in. And now you have a story where, okay, next year healthcare is going to be using AI to actually make money, reduce the time of drug trials, okay, increase efficiency in drug intake, things like that, things that AI was designed for, right? So I think it's garnering a lot of attention. So it was like a domino effect for XLV and for
but
healthcare.
let me ask you, how is that? That's what I don't understand. I mean, how is it? Because they could putting keywords faster. Like like all of these companies are laying people off, and they're saying AI is the reason. Is that really the reason, or is the reason giving them a very
No,
good
there's
opportunity?
been no evidence. There's been no evidence yet of job loss due to AI. That hasn't happened yet. I don't think that has happened. It's being talked about, but I don't think people are actually seeing it yet. And
Yeah.
I go back to that MIT study. 95%, according to that study, you want to look it up. 95% of companies are not really seeing the gains from uh, bringing in all these AI consultants and using AI. They're not seeing what they thought they'd see so far. So I don't think the job losses are coming from AI right now.
You know what? I think the companies are actually saying when they're laying off that it's AI. They're actually coming out and saying, that AI, is basically helped them reduce their headcount or whatever. So I don't know. I mean, again, listen, I think a lot of the healthcare trade for right now is that the market's looking, weak in general. Um, the moves are pretty good though, Eric. We haven't even opened today, and the Nasdaq this morning when I woke up was up 290. It's now down 70. Okay, I mean that's a pretty nice move. At least 1.5%, 2%. So, you know, the computers, the guys that are running the show are basically in the back room right now, turning the buttons so they don't have to trade. And it's not easy when the markets go up and down for the computer. The computer just, you know, I'm not going to name the names, but they like straight up slow, have a lot of retail Robinhood buyers, etc., and hope the market continues on higher. I mean, that's where they do best. So we'll again, we'll see how everything plays out here. Um, Markets are opening on the skittish side. I want to talk a little bit about um, currencies. They're kind of flat. The dollar looked like it was weak. It's a little bit strong today. The yen looks like it's going to pop here. It's at 155. That's like high levels. So keep an eye on the yen to the upside, more dollar strength against the yen. The euro is basically pinned to 116. We're long the euro. This trade has taken these trades in currencies, and I've traded currencies for 30 years, maybe more. Um, the trading in currencies is the slowest I've ever seen. I mean, the vol in there has got to be like very low. So,
Well, the vol there has been low for years. For
well, no,
years, it's been.
I mean, listen, the dollar's had a terrible year. It started the year at like 103 against the euro. So, I mean, we've had good moves, but the move happened early. There was nothing anybody could do. And
Yeah, and then it died. Then currency volatility died.
yes, it did. Um, but it's been dead. We talked a little bit about the bond stock. Wait for a move above 415. Maybe we'll short some bonds today. I gotta think it out. Um,
I'm
Oil,
actually I'm actually looking at bonds and I'm thinking, okay, well, the Fed is gonna start upping reserves in early December. We're November 17th right now. I'm not touching bonds right now, but I'm gonna be looking like around that date to see for maybe a bond reversal and some with the increase of liquidity potentially it could be a good bond long. So I'm flat right now, but I'm kind of planning to go long bonds.
yeah, but let me ask you this, okay? Who is buying our debt? That's the biggest problem. China's a
That's the
seller
biggest
of our debt,
problem.
right?
Yeah,
And we're going to have to issue more and more debt, okay? So
yeah. But as a
especially,
situational trade, like right now, bonds are short because liquidity is drying out. The probability of a rate cut is falling. Things like that. Now, that could reverse, right? So I'm thinking if it does revert, if That's the big question. If it probably happens around that December 1st date.
I don't know. I'm not bullish on bonds. I think we're gonna have a 4.5 yield, maybe even higher. Um,
Yeah, I'm not bullish right now, but I'm kind of like planning to be bullish. You know what I mean?
but let me ask you this, okay? How, if they're taking the tariffs down on everyone, literally everyone, okay? How are they gonna? The whole point, everything that Trump said for these tariffs doesn't make any sense. The original thought on tariffs was we were going to tariff countries because we wanted them to make all their products here. Okay. They've definitely gone away from that. Okay. That's never happening. Okay. And now they were originally saying, hey, we want to tariff hard because, Trump's touting how much billions and billions we brought in, right? But now he's reducing tariffs on everyone. I mean, every day I see tariff reductions, and I'm not understanding why. And then the wild card is we're up in the air on all of these things. For sure.
There's another chart I wanted to share with you that I think is interesting, and that's the very simply that's the Nasdaq S&P spread. And on Friday, I saw a technical opportunity to get back into that AI trade versus value. Value, I think, has kind of run away. Everybody's getting excited about it. But look at the RSI and the spread of the NASDAQ. It's been, you kind of have that positive divergence that traders are looking for with the RSI coming off oversold levels. And then on Friday, you had the pop in that spread. So I'd be looking at that. Like if I think the NASDAQ starts to outperform S&P today throughout the day, um, could be risk on again into Nvidia earnings maybe for a couple of days, and then the market calms down.
Yeah.
Don't
I
forget
mean,
Nvidia earnings.
dude, talk about earnings that are going to be ridiculous. Ridiculous. Okay. Ridiculous. You got the biggest cheerleader in all of, I'm going to call it all of sports, all of stocks. You have the biggest cheerleader in all of stocks. The guy would never say anything negatively real ever. And I don't think he ever has. Okay. What I think really people are waiting for here to see what the spend is on OpenAI, what this company is spending to do whatever they're doing with OpenAI. I think that's the big question because that's the money that's going to be thrown in the actual toilet, dude. The actual toilet. Okay. You might as well open up a toilet and throw it away because I'm telling you, that's going to be the caveat to next year. It's not this year. Like I said before, somehow they're going to sneak away this year, get out of this year with a good year. Um,
But who
and
knows? You know what? Who knows? I mean, the market is up only 14%. I just remember, I remember certain years. Like I remember 2018. 2018 was an interesting one, and there's a lot of similarities with this year. You had Volmageddon first quarter of 2018. You had something similar this year. The market recovered,
can't make
went
this up.
straight up into year end, just like it did this year. And then at the end of 2018, when nobody thought the market would fall, the market completely collapsed because of a taper tantrum, because it hit a brick wall against the Fed. And so who knows? I mean, 14% seems safe. You and I both at the beginning of the year thought the S&P would be pretty much, well, you thought it would be down like 50%, right? But I was kind of thinking like flat for the year. And maybe there's still a chance of that. What kind of probability do you think that the market has a chance to come back all the way down into December?
Yeah, listen, I definitely did not see this coming. I don't understand why it got here to where we are now, but we're here. But, from April till now, to be here with no corrections, no negativeness, no fear, no panic, no anything, but yet, wait a second, go back a couple of years, go back since 2022 and even into 2022, we didn't have a vol at 20. Like, why is our vol 20? The S&P futures are down 9 points. The Nasdaq is down, 20 points, and the VIX is up 5% or whatever. Why do you think that is? That's the thing I'm really struggling with here. Why with the market action, the S&P 500, what, 1.5% from an all-time high, 2% from an all-time high, and we're at a
It's an interesting.
21 VIX?
It's a very interesting question. So is it because of the puts or is it because of the calls? Right. So the skew has been lopsided towards calls, uncharacteristically. Usually you have the skew on the put side. Am I correct here? Like puts are going to be the implied vol on puts is going to be higher, but you're
Oh, it's
seeing
way
the
higher,
call
dude.
side.
The implied vol on out of the money puts is off the chart.
But
Okay.
that's not what you're seeing here. You're seeing the opposite, and
No, I am
maybe
not.
that's
No, I am not. How are you seeing the opposite? What opposite are you seeing? The index right now is at 67.23 on SPX cash for tomorrow. Tomorrow, that's one day. Okay. The 65.25s are 2.5. Okay. That's basically 200 points. How do you say the skew is more to the call side? It's not even close. The out of the money put.
it
Oh,
was, yeah. The skew was definitely towards the call side. I don't know if it's there right now, but
oh, come
up
on.
to
It's not
a week
even
and a half.
close. Not even close. Not even close. So let's go up 200 points on S&P. That would be 69 and a quarter. Those calls are a dime, one dime versus 2.5. The skew, and that's how it always is, and that's how it should be. But these out of the monies they're blown up, dude. You could sell those right now. Okay, I don't suggest this because I don't sell naked, but you could sell, for your book, sell a 15 lot, a 20 lot, freaking shut your machine and freaking come back in a day. I mean, that's like a 5% down move. I mean, come on. The skew is out of control to puts right now. Out of control. It's out of control. I'm just letting you know.
That's recently, but before the market started to drop, it was the opposite.
It was definitely
And you
not
still
the
saw
opposite, but it
saw the
was
VIX go.
closer.
Remember
It
that
was
remember
closer
that stretch. Remember that stretch of time with the VIX rising and the market rising with it. Why do you think that was happening?
because it's obvious because people didn't have hedges. So let me ask you a question. You're long the market. What do you want the market to do? What do you want the market to do? You're long the market. You want it to go up, right? That's a simple question. But you're not hedged to the downside. So they weren't letting people buy protection for cheap. So you still want the market to go up. These are, when you see this type of stuff happening, this is not a natural buyer of puts right now. It's not going, hey, I want to buy puts down 5% for one day, because the chance of that, you're better off, you can hit lotto probably easier than that in this market. Okay. But what that is, Eric, is that people saying, holy cow, if the market does go down 5%, I'm going to get destroyed and I need a hedge. And that's what that is. And what you're seeing right now, from what my belief is, the market is under hedged. Okay. They don't have enough protection to the downside for the size of their portfolios. And that's why you're seeing this big put skew. And I've seen it every day for the last week. Big. And today is really big. And even if we go out, let's go out one more day. Let's go out. Well, we got Nvidia earnings. Let's go to Thursday. Okay. Thursday. Okay. Thursday. Why is this not going? It's not even going down on my screen, but the 64.75, that's basically over 5%. For Thursday, you know where they are? $9. $9. That's pretty high, no?
Yeah,
What do you mean?
yeah. It's
That's basically
you
a
know what's interesting
five
though.
percent down move. You'd be giving up basically 40% of the year by Thursday. Okay. I'm not saying it can happen or it can happen, but
That's
there's
funny. That's funny
inherent
because it's
problem
funny
here.
because it's funny because you look at Nvidia earnings like the last 4 quarters, and you look at the market reaction on Nvidia earnings. It's not it's not a linear relationship. Like
You know,
you'll
listen.
have Nvidia go up on earnings day, right, the day after earnings, but the market would fall, or sometimes Nvidia would drop on earnings day, and the market would still rally for like a day or two. So you see some weird action around that Nvidia earnings report last few go arounds.
Yeah, I mean, listen, my thought on Nvidia and it's early is that they're going to really look through these numbers a lot more carefully and see exactly what is going on here. And, again, they're set to make $500 billion for the next 14 months, yet the stock is 5 trillion. So I don't know, what they're actually going to be scaled in looking at, but it certainly will be interesting to see, you know. Certainly will be interesting to see. And really again, oil not doing much, stuck around $60. Gold's the weird one. I mean, gold is so weird to me. It is. I mean, you listen. I look at you. I'm looking right at your face right now, and you are the gutsiest guy in America trading gold futures or silver futures, in that matter. I wouldn't touch that. That's like
Well,
liquid.
I got hammered on that Thursday and Friday. That's for sure.
Right, but
But
why do you need the futures? Like, I want to understand when you have a commodity moving 100 points a day. Like, why do you
oh,
need
because
the
I'm capturing certain setups, certain technical setups, and throughout the year, those setups have been paying extremely well during the Asian session. Specifically, Asia tends to buy, Europe and US then sell it off, and it's been like on repeat all year. It's been a great trade. It just hasn't worked out Thursday, Friday. What's interesting, I think, about the market in general last night is Asia bought the market as soon as 4 a.m. hit. Europe opens up, the market gets sold. So it's like the geographical areas are playing hot potato. Why I trade futures? If you're doing quantitative setups and you're trying to capture certain moves, the best way to do it
I
is
don't like it. I don't like it. What you're saying here is what
you
happened.
could not like it. You could not like it, but I'll tell you this: the way that you trade options is you're replacing futures just with options. You're going to oversize your options positions. Yeah, they're going to
No,
be
I'm
out of the
not. I
money.
could do any size I want. I could oversize them. I could keep them small. I could do whatever I want. But like,
Sizing is
I'll
important. I'm
give
not
you
going to
an example.
oversize my book on futures. I'm
Can
not
I
going to
can I explain so I can let
gamble.
people understand it? Okay. So when you trade futures, you're trading heroin. Okay. Listen, S&P is not heroin. Trading a commodity like gold or especially silver is like trading crack cocaine. Okay. The thing can move percents a day. You don't know when it's going to do it, and you run a lot of risk. And listen, I could do
Okay.
gold the same way you can, but by me using an out of the money call gives me so much more leeway. Like last night, I was selling some upside calls, okay? Because I was looking at the market, it was up 35, and I'm like, you know what? I don't mind selling the market up 120, okay? So I said, you know what? Up 120, which you would have to agree with, is a very outsized day. Okay. Very outsized. We've maybe had one or two the whole year. So I'm playing the probability. I'm playing the direction that I think with a probability. If I went into gold right now, and I like gold for a trade for the minute. It doesn't act great, but I like it for the minute. So what I'm going to do today is rather than touch gold futures, okay, I'm going to put a setup on where I'm either going to sell puts below the market that gets me long gold $70 from here. So I don't have to freaking sweat every tick like you. And if it happens to rally, I'll miss the rally, but I'm taking in the premium from the spread. I'm just saying it's a better way to do it. Listen, I
You
traded
think
on a daily
that's your
basis more S&P futures than any person alive for a 15-year period, okay? There is no
so
human. So
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 back
what I'm
then it wasn't cocaine, now it's crack cocaine?
S&Ps are not crack cocaine. Trading
Okay.
gold in this environment is crack. Okay. S&P is fairly contained. Having a 1% move today will be a very big move. Okay. Having a 5% move in gold, which you've experienced in the last three. Listen, you have to understand as a trader when things change. Gold has changed. We've all discussed this on the air. Gold has changed. Right now, gold could go down $80 straight down without an uptick. Okay. I don't know if you agree with that or whatever, but there's no liquidity in this thing. Okay. It's going up and down on air. Okay. Right now it's down $10 for the day. You could turn around, it'll be up 50. I don't want to be in that. I don't want to be I don't want to be in what I call hard delta or futures in a market that can blow me out. Okay? And this market can blow you out. I'm just letting you know.
Well, then
S&P.
your portfolio should never vary 3-4%, but yet it does, right? And you're still just using options. It's just that you use
What are you
options.
talking about? I
You're
no, dude.
hold up. You use options. There's traders like you that use options as a primary source of return. Like that's the book.
I'm
I
bringing
don't
in
do that.
income.
I use options to accentuate or hedge my futures positions. That's what I
Okay,
do.
then you shouldn't have gotten hit if you used them. But you did because you didn't, either you used the wrong ones or whatever. The bottom
Well,
line is,
direct,
listen. I don't want to have,
directionally
I
wrong.
don't want to have an argument over this. Keep trading
There's no
futures
argument
and
for that.
markets. Well, what I'm telling you is, you have to understand the markets. Gold right now,
Clearly,
and you
we
have
all do.
to. I understand that, but gold is off the rails. Okay, it went up 100. Listen, last Tuesday,
In what way is the number one performing asset this year off the rails? Can you
it,
explain to me?
it is the number two performing asset for the moment. Okay, but I would say this. Okay, I would say that. Listen, I'll go to this. Why are you buying gold today? You can't even give me a reason. Like you
I'm not buying it.
usually. No, I'm not. I'm just saying, if you are, you would say, "Oh, the bond market's doing this. The dollar's doing this, the stock market's doing this, it's risk on, it's risk off." Like, I came up with this anomaly or this thing, okay, where I was really making a lot of money last week in gold by basically using risk on, risk off. Like, gold was moving positively with the S&P. Okay, S&P was up, gold was up. S&P was down, gold was down. It was like a risk off trade. Then on Tuesday of last week, gold rallied $80 when the market was going down. It like went off the rails. But let me tell you what, if you look at it, it reversed $150 on Friday when we had risk off. So something kind of went awry. Maybe they caught people with positions, but there is a big correlation right now. Right now, I'm not saying it's going to last forever, between risk on and gold. Okay. Also, your
That
favorite.
I'll agree with right now. For right now, I'll agree with
Right.
that.
So
But
that's what we're
overall,
trying, Eric. That's what we're trying to do on the show, is to try to get people ready to understand on a day over day basis, kind of like what we're looking at. Listen, I know you think gold's going to 5,000, 10,000, 20,000. Whatever. I'm looking at it like I just want to figure out where it's going today or tomorrow if I'm in it. And I want to put positions on that give me leeway to be wrong because honestly, I don't know what they're looking at. I don't know what they're looking at. I'm being dead honest. I don't know what they're looking at to trade this thing other than risk on, risk off right now.
I
I
think
can't.
from the indicator point of view that you're looking for, like a bond clue or something like that, I think the number one thing is the yield curve that will drive gold, and when the yield curve is rising, gold loves that, and all throughout the year, that's been the case on the 210
Listen,
spread
I'm trying to buy
rising.
gold. I'm trying to buy gold.
Notice
Seven.
what the 210. Notice that the 210 spread kind of has been coming off a little bit or stalling, and gold has entered a problematic stage.
Time
Also,
out.
liquidity is a factor too.
Time out. Time out. Gold is up 56% for the year. Okay, you're looking at a 210 spread. I mean, come on. I mean, that thing hasn't moved more than 20 basis points the whole year. I mean, come on. It's crazy.
Yeah, but most of
I get
gold's
it,
gold,
but I don't know if you're looking at that per the day. I don't know what you're looking at, you
no,
know.
no, you can't look
But I
at it
want
per
to,
the day. You look
before
at it.
we get close to closing, I want to swing a little bit to your favorite thing. You know what that is, right? An asset
Uh,
that somehow is an asset that now is only down to $1.6 trillion. Dollars. It's smaller than Tesla. One stock. There are seven stocks or eight stocks that have more market cap than Bitcoin, which is somehow an asset class. Okay. But Bitcoin to me, I have traded a lot of things. I've never seen anything like this. There is no liquidation. Do you see a liquidation? I mean, I heard
pretty
that
orderly. Pretty
BlackRock
orderly.
sold a billion. That doesn't sound like a lot. Um, and now it's breaking lower again. It's back to 9,300. Um, I mean, 93,000. Like, when are you going to see advanced selling? And I think Michael Saylor put out today what he bought, which he had to have price averaged above 110. Okay. His price average since day one on Bitcoin is close to 80,000, maybe a little higher. The guy isn't even up. I mean, I don't even get it. And he's got his this is the actual rules that I teach the opposite of. You won't have the smallest position when you're losing, okay, and your biggest position when you're winning. This guy will keep buying until they go and put the hook in the back of his shirt. Okay. I mean,
Well,
you don't
that's his business plan actually,
well, that's
is
the
to just
very bad
accumulate.
business plan. You can't rely on one thing. Like
What
buying
happened to him?
Bitcoin stock.
What happened to him is the advent of treasury companies that started replicating what he's doing. Also, he started selling a lot of his stock to buy Bitcoin, and it was just a sentiment shift like a couple of months ago that started. And I don't know if the premium's now zero. I don't know if it got to zero, but
No, it's not
no,
zero. It's not zero. It's not zero, but who knows? All I'm saying to you is let me ask you this. If I could buy Bitcoin, hold it for myself, right? Hold it for myself if I actually want to. Why would I ever buy that stock if that's all that stock is doing? I'm just
perfect
trying to
question. I
understand.
never understood why.
It should
I
trade at a
never
discount. It should trade at a discount. Okay. Anything can happen to
I
him.
never bought into that ridiculous story. Like, why can't you just go? Okay, you're talking about you need leverage. You can leverage Bitcoin in any at any exchange, and if you
What do you mean?
use a
This was
V,
a meme. This was a meme stock. They didn't care. They didn't care. They didn't care at all. But the stock is now trading at $197, down from almost $500. Okay. And my question to you is when are people going to have to sell? When are they going to get hit, Eric? When are they going to get hit here? That's the thing.
the
In
other problem is
Bitcoin,
you have a bunch of clowns coming on CNBC. I'm not going to name names, but you got a bunch of clowns, and still, even with this down move, like you got to admit you're wrong sometimes. Even with this down move, they're saying Bitcoin to 250K by the end of the year. So people are listening to that. They're seeing these morons pound the table, and we're in this industry. right? The newsletter industry where you have a ridiculous guru. He's wrong, and he's going to pound and pound, and his clients are losing everything. But
No,
just to save
no.
face, they're going
Listen to me. In this business, we are different than most. We put out trades pretty much
to
every single
exactly,
day. We
exactly.
we get marked on our report card every single week, every single day. But when you say they're pounding 250 by the end of the year, there's no one in this space that's doing that. They want a 10-year time horizon so that they have 10 years to be right and no one
They're,
questions. Nobody
no, they're,
Nobody is coming out with 250. No one wants to be pigeonholed for a month. They want
look
10
it up.
years.
Look it up.
Okay. So it's a very
Look it
bad
up.
environment. And one of your best friends I saw on the air over the weekend, and like he never traded Bitcoin in his life till a year ago. Now he's a Bitcoin guru and he doesn't have a thesis and he just is literally on the air telling people, don't worry, just stay in it. He's not even saying buy anymore. Just stay in it. You're going to make a lot of money. I mean, how does that work? How
Well,
how can you do that?
he's staying in it too. I know he's staying in it. He has it. And he's staying in it, and I
Okay,
think he
but
does
my
have a.
question is, okay, Eric, doesn't that make you feel uncomfortable? I have trades today. Okay, I'm sitting on a firecracker right now. I got to make moves when things go against me. I don't sit
Same
in it.
here.
What kind of person
Same here.
sits in it? I'm just trying to understand. And then I want to wrap because we're close to the opening. But what kind of person sits in a 35% loss? I'm just trying to understand. Someone that doesn't understand the business, because now to get back to even, you got to make over 50%. Okay,
Correct.
you're dead. You're dead. So I'm asking you, what kind of person? You're saying, yeah, 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 these guys are still in it. They may have one coin. You don't know what their positions are. But needless to say, though these risk on markets look a little shaky. Gold's making another down attempt right now. S&P is just sitting. They want to buy it this morning again. We'll see if it holds. And you know, that's really it. And the market, the volatility doesn't make sense for the market move for right now. Now, either we're
Straddle
gonna
at 46. Straddle at 46.
That's nice.
Pretty high.
Yeah, I
No.
mean, we're going to have movement today for sure. I mean, for sure. So everybody,
So
hang in there.
how you can you suggest something for us to kind of, do we hit the buttons at 9:30? Do we wait for a level? What are you thinking?
I think I'm
You're
scared.
on right now. You've gotten a lot of things right over the last week, so I'm going to start listening to you a little bit more.
Oh no, then yeah, dude, the double jinx is on.
Oh,
No, I
stop
I
it.
don't. You know what?
Do you actually believe in that crap? Come on.
I don't really see anything. I'm a little leery of the downside. I mean, if we go down another 20, 30 handles, maybe I'll look to sell a put spread, but it's difficult. A 46, you know what I always say? One of my sayings, and people that know me know I always say this: when volatility is 20, it should be 30. When volatility is 15, it should be 8. Okay. So that's where we're at. Vol is too low for the market movement, even though it's high. So be leery of that. If we have a leg down here and we end down 50, 60 handles, you may see a 25 vol by the end of the day. So, that's the one thing that I'm really nervous about is an extended down move, and it doesn't even have to be big. If we get a down 1 to 1.5% day today, you're going to have volatility above 23. So that people don't have the protection on. I'm looking at European markets. They're down a decent amount, but it's funny. I'm looking at Europe in dollar terms. Do you know how much the DAX is up in dollar terms this year?
Tell us.
30%, 35%. The IBIX is up 50%. I mean, these indexes, if you use dollar terms, have exploded. And if you use dollar terms on our index, we're down on the year, basically flat on dollar terms. So if you're in Europe, okay, the S&P 500's up 13.5% for the year, and the dollar is down more than that. So if you're buying out of any other country, except, Asia, if you're buying in the EU or even the B pound, you're not up money buying US stocks this year.
Yeah,
So,
I'm surprised by international markets outperforming the U.S. market all year long. Um, Usually that happens at the beginning of the year and fades out towards the end, and it hasn't really happened this year.
yeah. Well, we'll keep an eye on that, but we're 5 minutes out. As far as trades, um, I like a bond short here. Not pressing on that. Looking to buy a little bit of gold. I don't know why. Maybe you rubbed off on me somehow, but I'm not going to buy the outright future or cash. I'm going to buy by selling a put spread. Um, at this point, I don't want to buy a call spread. Um, oil no trade. Um, Depending on what goes, I'm a little nervous. I'm not nervous, but
With gold, I'm waiting for. With gold, I'm pretty flat right
now
now.
you're
Just
waiting.
I'm waiting. Yeah, I want to see a little strength. I don't like how it's trading all of last night into today. There just seems not to be a bid there, and the way that it came up off the low on Friday, you would think there would be some carry through to the upside, and there
Hey,
hasn't
let
been.
me let me let me ask you a question, and we're going to leave on this note. You're a professional. You manage a hedge fund. Okay, you're managing client money. Okay, I, I don't understand how people could go out there in Bitcoin, which is now down over 35% from the high ticks, okay, which is a lot, right? We traded 128, now we're 93, okay? The bottom line is, how can you just sit? Like, what are you sitting for? Like, I'm trying to understand. Like, at some point in here, there's going to be a max liquidation. That's when you want to buy it. The way we're going now, that's coming maybe under 80,000. I don't even know
Yep.
where it can go because there's been no liquidation. None. Zero.
So you and
And
I
then,
talked on you and I talked on the phone yesterday. That's when I would get aggressive with Bitcoin after that liquidation. Here, it's
yeah, but we're not seeing it, and I don't know if we will see it, but listen, I just know everyone owns Bitcoin. No one even knows what it is. No one had Bitcoin 2 years ago. You know that. None of these new OGs. These OGs are missing a letter. Maybe it's just G or O. Okay, because they got no letters. Okay, like I don't understand. There's going to be a point in time, Eric, where they hate it. Where they hate it, where it's going to be a dirty word and they're going to be angry with it. Okay. So that's when you're going to see people being like, I don't need this crap. It's a fraud. I'm out. So we're not there yet. But keep an eye as we're opening. We're too close to the opening, so I want to wrap right now. But S&P sliding lower, Nasdaq just got hit, and vol is exploding. So be careful out there. Enjoy the day. Peace.